Ashwini Agarwal is with us, founder and partner at Demeter Advisors. Ashwini, of course, has been a bit cautious at the margin. Ashwini, good morning. Good to have you here. Market's still broadly holding, though, even with all this uncertainty. And the bias has been to try and, look for opportunities whenever there is any small dip. How are you placed, Ashwini, and what's your view near term?
Morning, Prashant. Thanks for having me here. It's a good question because the market seems to be sort of not really taking notice of what's going on in the Middle East. And while there have been rumors of Iran having asked for mediation, etc., there has been no let-up in the hostilities between Israel and Iran, and oil prices have inched up. They could do worse, and none of this seems to phase the market in India. I think it's a question of liquidity. I think the rate cut that went through, as well as the cut in CRR, took the market by surprise, and households continue to pump money into the markets, and that's driving it. The second thing is that hopes have now surfaced that domestic growth, which is very weak, and capex, which is very weak as of now, will hopefully start to turn later this year with lower rates and easier liquidity. We have to see whether that plays out or not. So my sense is that in the near term, given slower growth, given global issues, you can't see a lot of upside. And, as you were discussing just before I came on, the paper supply has started to kind of resume with a big gusto. So my sense is that, there's not much upside from here. Whether there's a lot of downside or not, it's difficult to tell. One fine morning, we might wake up and say, oh, Middle East is a real worry, and sell off in a big way. But outside of that, the way I think about it is that this is going to be a year of single-digit returns, possibly, and whether that's a combination of doing nothing for a long time, or it's a combination of a step down by 5-7% and then up by 15%, I really couldn't tell.
All right. Hi, good morning, and good to see you in. It's been a while, Ashwini, since we had a chat, but you're sounding a little bit somber this morning. Now, we've already got, low single-digit return for the year on the Nifty. Since you're saying that, in fact, maybe we could consolidate a little bit and maybe don't expect big upside from here on, say till the end of this year. My question to you is, what about the downside? We made a low of around 21,700. We went there twice, actually, and we saw a solid rebound. Have we made the low for the year?
I think that that is behind us. Now, obviously, what I will keep out of the equation is a significant deterioration in global peace and quiet. If the war in the Middle East were to sort of get a lot worse, the dreaded end button is pressed or something along those lines, though all bets are off, right? So let's keep that out of the picture. Outside of that, I think the worst for India is behind us. And the reason I say that is that, the big downside was caused by earnings downgrades. The pace of the earnings downgrade seems to be reducing. The RBI action, which I spoke about earlier, is a big positive, and hopefully government capex in railways, defense, as well as lower rates and better liquidity will encourage the corporate sector to start investing. That's the hope that we all have. And that makes me think that the bottom is behind us. Now, could we go down to whatever, 23,500, 23,600 before we hit new highs from here? I can't say. I mean, those 5-7% types of moves are impossible to tell. But I don't think there's a lot of downside from here.
All right. So, Ashwini, since you spoke about the RBI policy, a lot on the street believe that maybe the RBI cutting rates is not as much a credit growth positive as it is for the assets, the rate sensitives. And that's something that we've been seeing over the last few trading sessions. The real estate stocks are doing a lot better. We have macro tech developers, which is higher. Oberoi Realty, Godrej Properties has gone ahead and, bought some land in Pune, etc. as well. So while at a broad level, the index will give you single-digit returns, or the bottom is, in place right now, what sectors would you be betting on for the next 1 year?
Mangalam, this is one of those markets, where finding mispricings has become very, very difficult. I would often have at least 2-3 sectors that would look good to me. but this is a time when I'm really struggling to offer you a sector-wise sort of buying list. But, if I zoom out a little bit, I think, you spoke about rate sensitive. So, in that vein, I think life insurance companies could possibly be an area one can look at. I think domestic healthcare continues to look reasonably positive. And I think in the small cap space, I think there are still some pickings, few and far between, but there's still some pickings left. But, sector-wise, almost everything is priced well. So there's not really that much one can do. One can look at rate sensitives, and REITs come to mind. I think, that's another area where, you could make money. I mean, I was reading a research report yesterday which suggested that most of the REITs that are listed still have a potential of about 12 to 13% IRR over the next 12 months, which is not bad considering where we are.
Totally. So you like rates, you like the insurance space, you like some of the rate sensitives. You did briefly mention some of the small caps which are looking attractive. I'm not sure whether you'll be able to specify which ones, but if not specify them, at least give the street a direction as to where there are attractive opportunities.
In the auto component space, the performance across stocks has been very, very divergent. Some have done well, some have done very poorly. And I would say that, sift through the list of stocks that have done poorly in that space and see if there are a few that make sense or appeal to you. In the NBFC space, again, the performance has been very divergent, and there are some value pickings there, which look good to me. So, those are two areas that I'm looking at. In the domestic consumer space as well, while consumer has been pretty lackluster in terms of demand matrices, I think there are a couple of stocks that look very good or promising, at least, let me put it that way.
You spoke about consumer stocks being promising. One of them that has done extremely well is Gillette. It's up around 10% this month from, in the last 1 year or so, it's up 35% at a fresh record high. Once again, for that stock, three things working for them. The most important thing, them having increased their total addressable market from just being the best a man can get, getting into the other gender as well. Venus, which is one of their women's razor products, doing extremely well. And also, lower metal prices does well for their margins, and they have been increasing their presence when it comes to the distribution and premiumization as well. So all these factors doing well. I remember, Prashant, when there was a time when every 6 months or so, there would be a new product coming in from Gillette. Yeah. They would add another blade. There was once the Gillette Vector, which was 2 blades. Then there was 3 blades, the Mac 3. Then there was one with 4, and now there's Fusion 5, which is 5. I see another one coming very soon, which is 6 blades.
But the razor for women, is it new or is it pretty old, right?
It is pretty old, but earlier it would account for about 10% of their sales. Now it's growing at double digit. It's growing at twice the pace of the razor for men, because razor for men, one, is a highly penetrated industry. Secondly, the culture of beards is here to stay. So how else do you increase your total addressable market? I think start looking at the other gender.
I'm paraphrasing, but I think I said this earlier also. I remember Warren Buffett back in the day, 20, 30 years ago, was on, he said, he was commenting, he was asked about Gillette. He said, men have one face, women have 2 legs. So I think that's Buffett for you. And he was talking about Gillette and how that's a big opportunity. But I think here in India, as you said, maybe they're pushing ahead, right?
They're pushing ahead. And the other part also for India is that with the beard trend, everyone's talking about how beard would, be spell doom for Gillette. Yeah. Now they've gone into men's grooming as against just a beard. So if you look at their latest campaign as well, if you drive down the streets of Mumbai, you will see hoardings of Hrithik Roshan having the Gillette Fusion 5. On the one side of the image, he is clean shaven. On the other, he has a beard and he is grooming that beard. So even the Fusion 5 has another blade behind which allows you to groom the beard. So even if you have a beard or you don't have a beard, you might need Gillette. For all three of us, we are regular users. So,
well, I think interesting consumer space there really coming through. Do we take a quick commercial break here? Okay, I think, let's do that. Ashwini, thank you very much for joining us. Great speaking with you, as always, here, and appreciate your comments. Well, market